Welcome to the Titans of Industry show. Today I'm with Mark O'Brien, goldcore.com, a very reputable bullion dealer. And the reason that I want him to get this interview really in front of you guys is because right now the investment demand for bullion is very, very weak. And it's test time for gold and silver to see where they go from here. Gold is up about 22% since it bottomed in December of 2015. Silver is up relatively the same amount. And so the spot price has gone up. The mining shares have plummeted despite the moderate bull market in gold and silver. But now we see an environment where the Fed has actually raised rates to about 2%, while the ECB and the BOJ have not yet. And I wanted to get Mark on because it gives us a very good insider look on what's going on in the physical precious metals world. So, Mark, thanks for being on the show.
It's great being on with you, Lior.
I want to ask you first, looking at investment demand, looking at your clientele, looking at what's going on in terms of where the miners are sourcing their silver, is it fair to say that it's been demonetized to an extent?
Yeah, I think it is, and that's been going on for decades and arguably centuries. Over a long number of years, gold has gradually been demonetized. I mean, silver has been demonetized much more so than gold. They've both been demonetized, but I think silver's been more demonetized. So if you go back throughout history, gold and silver have been money, and silver arguably has been even more important as money in more countries in the world than silver. And it's interesting that the French word for money and for silver is interchangeable. It's argent. And in Spain, it's plata is the word for money and for silver. And even here in Ireland, where we're based, arrogant is the word for silver and money. So it's amazing the amount of countries in the world, throughout the world, in nearly every continent, the word money and silver is interchangeable. And basically, so silver was interesting because it was more the money in more recent years, more recent centuries, and I would say in the last year, particularly in the 19th century, silver became more the money of the people. It was more what people would use day to day, and gold was more the money of the wealthier people. And then in the 19th century, 20th century, it became, obviously went to the gold standard, and it became the money of governments, of central banks, and indeed of banks. So it's interesting. In effect, it has been demonetized throughout the world now. And I mean, even it's interesting. We still sell. We have a relationship with the U.S. Mint, and we would sell the U.S. Eagles. So your 1 ounce gold Eagles and silver Eagles, and they remain very, very popular. And we also sell what are called 90% silver bags and 40% silver bags. And the 40% silver bags, basically all the coinage that you used to use in the States, and you still have it in your pockets, your nickels, your dimes, and your quarters were made of silver throughout most of the existence of the United States of America, up until the 1960s. And in the 1960s, you went from 90% pure silver to 40% pure silver. So from 65 to 69, JFK, we actually could sell these coins. They're 40% pure silver coins. That does $half and quarters. So it went from 90% pure silver to 40% pure silver. And then from 1970 on, in effect, the silver content was completely taken out of the coins. And I think today we went to base metals in effect, alloys of nickel and zinc and copper, and now today I think we're even moving away from the base metals. This is classic currency debasement. I think they're talking about synthetic coins that we're going to use, if any coins at all, obviously, because there's a risk of cashless society. So long story short, yes, silver has been demonetized, and I think that's I think it's likely to continue. The only possibility of silver coming back is India has a massive affinity for both gold and silver, but they've waged a little bit of a war on gold recently, and because they don't actually have any indigenous gold mines, the government is actually even more favourable towards silver than gold. And the demand for silver has been very, very high. The silvers tend to be quite canny buyers, and they tend to seek out value, and they see silver as much more undervalued vis-a-vis gold. So there's huge demand for silver in India, both as a store of value, in coin form, but also in jewellery form. And I think that's the only real chance that silver has of ever being monetized. I think more likely it will remain as a speculative asset for some people and as a store of value for other people.
Now, that's very that's illuminating, because many people really feel like gold and silver should trade at a 16 to 1 or 20 to 1, and I have been talking about for years the fact that even seeing it going back to 40 to 1 or 50 to 1 is all due to speculative demand, because it is demonetized at this point, and obviously save for another 2008 type moment where it traded for a large premium above its production cost. I would say that it should trade, give or take, above its mining production cost, whichever it is, over the long term. I want to ask you about the connection between investment demand and the Trump elections. Have you seen demand falling, plummeting since the Trump election, especially from U.S. clients?
No, I mean we haven't, and we had a particularly good year in 2016, both because of the election of Trump and also because of Brexit in this part of the world, in the UK and Ireland, with the UK voting to leave the European Union. So that created a lot of, I think the election of Trump and Brexit created a lot of geopolitical uncertainty in the world, and we saw quite a significant uptick in demand, and obviously the gold price started to move up as well around then. I think there were expectations that the gold price would continue to move up, but it didn't, obviously. But yeah, bottom line is, yeah, we did it, but that demand has come off, and I think demand has fallen. And it's interesting. I mean, there's different segments of the marketplace when you talk about gold demand and investment demand, and we try and break it out. And investment demand is obviously more on the ETF side of things primarily, and for gold mining companies. And I think a bullion demand will be more store of value demand. But the investment demand the bullion demand is well down, particularly in the US, and you can see it very clearly in the figures from the US Mint in terms of demand for the US gold eagles, in particular the 1 ounce coins. It has fallen very, very sharply, and that's reflected actually in the statistics for most of the government mints around the world who report their sales, and you can see it with the Perth Mint in Australia as well is another example. But the refineries, we know, I mean, we're in the business, we have relationships with all the major government mints and the major government refineries, and we know that from conversations that the refineries have also seen a fall in demand, and so the West in general, the Western world has seen, particularly the US, I think more so than anywhere, because the UK saw a pick up in demand because of Brexit and that. And in Germany, it's interesting. In Europe, it's patchy. It's, different nations are seeing different levels of demand. But Germany is seeing very, very strong demand in recent months and years, both for ETFs and for physical gold coins and bars. I think the Germans are worried about the European Union and indeed the euro, and I think rightly so. And obviously we've seen a flare up in the Italian political scene, and indeed in the Italian bond market in recent weeks. And I think it's interesting that the Germans, they realise that they share. We're not seeing much demand from Spain or Italy or the peripheral euro nations, and even here in Ireland, our home market, demand remains quite subdued. But so we're not seeing demand from the periphery nations, and it's funny. I think they believe that they share a currency with the Germans and with the German Bundesbank, so they're a little bit complacent about these things. Whereas the Germans realise they share a currency with the Italians and the Spanish and the Greeks and the Irish, and they realise, that maybe it might be a good idea not to have all their eggs in that euro basket. So they're being quite prudent, as the Germans tend to be, and they're diversifying. So so it's a bit mixed, really. It depends. The bullion ETF demand has come back a bit more recently. Globally, but it very much depends on which asset you're talking about and which geography. It's quite a mixed picture, shall we speak. But in general, I think it's still quite depressed, and I think sentiment is quite depressed as well. I think that's what you're very much alluding to.
Now, overall, in your experience over the years, who buys the most bullion? Is it the North Americans, the Europeans, the Russians, or the Asians, or maybe the Australians?
In our experience, it's very much the Asians. And with hindsight, I do say to people jokingly sometimes that if I knew now if I knew then what I know now, should I say, that I would have set up my company in Hong Kong or Singapore rather than in Dublin, Ireland, because unfortunately in Ireland we're a bit like the UK as well, I think, and to a degree the US. I think the Western world, the English-speaking world, gold has become quite niche. Even more so in the UK and Ireland, that there is no real tradition of investing in gold in the last 20, 30, 40, 50 years. Property very much became our tangible asset of choice. Stocks and bonds, traditional assets, stocks and bonds really became the traditional assets that we have in both investment and pension portfolios. And gold became seen almost as this antiquated, barbaric relic from the past, A little less so in the US. You guys do have more of a sort of a hard asset culture. I think there is still more of an understanding of the risks of inflation and of currency devaluation in segments of the US, So, but in general, all the research shows that the people who buy gold and invest in gold and understand gold most are Asian nations, particularly the Chinese and the Indians. And they're what supported the gold price in recent months and years, because their demand has remained quite robust, Even they tend to buy on weakness, so they tend to be a fundamental pillar of support underneath the marketplace. The Germans, as alluded before, I think the Germans, recent research showed that the Germans have the highest per capita consumption of gold in the world. They are just they've had, world wars, they've had currency devaluations and the currency hyperinflations. So it's still, even as late as 1945, so in the lifetime of elderly Germans, they saw their currency wiped out, So they very much understand the value of hard assets and hard currency and hard money, that is gold. So in terms of our clients, we're primarily UK, Ireland and US. And we're not seeing many new entrants in marketplaces. There's a lot of repeat business, and the new business we're getting tends to be people and investors who already bought gold either with some of our competitors in what we call digital gold platforms, the likes of bullionvault.com, or they tend to be people who've bought gold ETFs, and we're winning business from those alternative ways of investing in gold. The demand on the street is piling into stocks, bonds, property, which are all-time highs. And indeed, the more speculative people are obviously looking at cryptocurrencies. Sorry, not just the speculative people. There are some very intelligent people who see the value in the cryptocurrency and segments of the cryptocurrency space as well. So gold and silver are seen as a poor relation for the moment. And I think that's slowly changing, given the geopolitical risks that are in the world. But it is happening quite slowly. And the price hasn't helped, and given how depressed it remains.
Understood. And that is very interesting in terms of my next question, because it fills right into it. Gold has been a great investment for 18 years. It started the year 2000 at $250 per ounce, give or say, and it went all the way up to $1,900 per ounce. It's at around $1,300 right now. It had a great run. Perhaps the run is over for the next few years, and it's time for gold to greatly underperform the stock market, which has kind of been par with gold. Historically, obviously, stocks have outperformed gold because they're a productive asset, and gold should be compared to cash and not to stocks. But it's done so well that it has been compared to actually to stocks. Could we see a bear market in gold for the next few years and not the continuation of a bull market?
Yeah, it's possible. I think it's highly unlikely, because I think we've already actually had the bear market. And when you look at the figures, as you said, gold had a massive outperformance, particularly in the period from 2001 to 2012. As you said, gold went from $250 to $1,900 per ounce. So that was a huge appreciation. I think it was roughly 15% per annum. So it became massively overvalued. We actually went on Bloomberg TV around a week or 2 weeks ahead of the top, and we said the price has gone parabolic. It looks like it's a bubble, and we could see a very sharp correction indeed. And I said, in the worst case scenario, we could actually fall 50%, as happened in the 1970s, as gold prices went from $35.71 to $200 in 75, and then they fell from $200 to $100.76. Everybody said that we're in a bear market, and lo and behold, gold prices subsequently rose from $100.76 to $850 in January 1980. And I think we're more likely to see that again. I think, all the froth has come out of the gold market, as we spoke to there. The demand is very, very low. Sentiment is very, very poor. Stocks, bond, property throughout the world, all-time record highs in most markets around the world. And gold was down 28.3% in 2013. It was down another 1.5% in 2014, and then down 10.4% in 2015. So I keep an eye on it. There's a good website, and we use their tables quite frequently, goldprice.org, and they have a wonderful table which shows the gold price performance, the percentage change of gold every single year going back, 15, 20 years, and they have it in dollars and euros.
I've analyzed
and pounds.
that chart many times.
It's very, very good. Yeah. So when you look at that, you can see we went into it. I think we went into a mini bear market. I think you're right. But I do think we probably had the bear market, and I think we're slowly coming out the other side of it, very slowly, and as tends to happen. And I think there are parallels with 2003, 2004, 2005, in the early stages of the last bull market. So it's been a great investment, but I think it's also important to consider. Maybe it's not so much an investment per se. It is more, again, the store of value. It's a hedge against currency devaluation. And I think, given the scale of quantitative easing we've seen in the world, and the amount of money that's been created, and the destruction of the central bank balance sheets, I think that we are more likely to see the dollar, the euro, the pound, these currencies devalue much more, I think, in the coming months and years. So I would be genuinely positive on the outlook. In the short term, I think that there are risks, and the trend, it's, we just keep not breaking out, and that creates a risk of further weakness in the short term. But I think the medium and long term outlook is still very positive.
Very interesting. Let's talk about the various products that Goldcore can offer to bullion investors. Talk about some of the best ways to get started if you've never bought gold and silver, and you want to make an allocation and store some of your fiat cash, convert it into bullion, and have this added layer of protection, and obviously a speculative layer of protection in terms of if something catastrophic ever happens, your purchasing power will obviously jump compared with holders of fiat currency. So talk about some of the things that are very easy for people who want to start out.
Yeah, well, basically there are many different ways to invest in, and indeed speculate in precious metals. And so it's like everything in life. It's you need to decide what's your goal and what's your outcome, and what are you trying to achieve, and then it also comes down to, I suppose, your age, and how much risk you're willing to take, and your risk tolerance. Well, we specialize, and basically when you start having that conversation in your head and you start to decide what you're trying to achieve, that will help inform which product or which type of gold and silver investment that you would allocate funds to or speculate with. So we very much specialize on the physical side of things, and we use the analogy of a proximity to gold. And basically, the closer you are to your gold, the safer it is, basically. So if you are buying gold not purely for price, not purely for speculation, and there's nothing wrong with that per se, and some people do both, But if you're going to do that, then the way to do that is to buy your gold futures. Is a very leveraged and high risk way to do it. You can buy CFDs, you can spread bet. And then you can actually go and buy junior gold mining shares, which are quite a speculative part of the marketplace as well. And that's where you're taking a short-term punt, and you have a short-term outlook, and you're very much about trying to get that return. Whereas, but if you go through the value chain, somewhere in the middle is probably a gold ETF, which is again another way to get exposure to gold. But you don't really have exposure to underlying physical asset with most of the ETFs. You actually you basically have exposure to price, and they're a great vehicle for people to get exposure to the price and to get that exposure. And they can go long and they can go short, and they're relatively low cost. Most of them around 50 basis points per annum. But it's funny, when they first came on the scene, we started looking at them and we started reading the prospectus, and it's interesting when you drill down and you get into the small print in the prospectus. They've actually indemnified themselves from a lot of the risks. A lot of the reasons that you own gold are some of the more serious systemic risks in the world, the macroeconomic risks, geopolitical risks, and indeed the systemic risks in the modern fiat-based monetary fractional reserve banking system. And so when you own an ETF, your gold is actually stored. Many of the custodians and indeed sub-custodians are large Wall Street banks, many of whom have balance sheet issues, shall we say, and basically you are an unsecured creditor of these banks. So in any sort of a worst case scenario akin to the Lehman Brothers crisis, and unfortunately we do believe that we will see another crisis akin to the Lehman Brothers crisis in the coming months and years, and I see Deutsche Bank has reached all-time record low prices in share price in recent days. And I think that the next financial crisis, we're going to see bail-ins, and I think people's assets are going to be even more vulnerable than they were in the last crisis. So in that scenario, physical gold comes into its own, and we tell our clients that the old rule of thumb is you put 10% of your wealth into physical gold, and you hope to God it doesn't work. Because if it does work, it generally means that the other 90% of the portfolio probably isn't doing too well. The other 90% of your wealth, including your business, your family home, property investments, stocks and bonds, they tend to not do so well in financial crisis because they're cyclical assets. Whereas gold is more of it's a hedge, it's a counter-cyclical asset, and that's why it's a very valuable thing to have in a portfolio. So that's what we do. We specialize in the physical side of things, and we allow people to own gold in the safest ways possible, both in the safest vaults in the world with the safest vault providers, the likes of Loomis in Zurich and Loomis in Hong Kong, and Brink's in Singapore. And we specialize in, I suppose, we allow people to own gold as what's called allocated and segregated. So you're not, your gold is not commingled with all the other investors. You don't own part of a large bar. You would actually specify that you want to own 50 or 100 1-ounce gold bars or kilo gold bars or American Gold Eagles or Silver Eagles or whatever it is, and you would have outright legal ownership of those coins and bars. And if something happens to Goldcore, if something happens to our websites, to our phones, you cannot contact us for any reason, you cannot get pricing, you cannot get liquidity, it doesn't matter. You have direct access to the gold. You can actually you can fly into the Zurich, Singapore, Hong Kong and collect your gold. You can instruct the vaults to ship it to you in the United States or wherever you want it shipped in the world. Or indeed, you can just instruct the vault to transfer your gold to another bullion dealer. And many of the larger bullion dealers in the world will have corporate accounts with these safe vault providers. So you can simply transfer the gold from your account into another bullion dealer's account, and then you have that liquidity, and you can sell and you can get money. You can sell some or all of your gold or silver, and you can have money sent to you wherever you need it in the world. So we've set it up whereby we allow people to do that. So the counterparty risk of Goldcore has been pretty much eliminated. And we believe that's important because, all the research and history shows that gold is a safe haven asset, but it's only a safe haven asset if you own it in a very, very safe way.
How can people get in touch with you, Brock?
Well, the website is goldcore.com. So, and we have the UK and the US websites there, and we do daily research on the gold market just to educate people about what's happening in the gold market, because it's quite a poorly covered market. And all the contact details there, the email addresses and phone numbers, and we're also all over social media and on the usual places on Facebook and Twitter and YouTube. We do a podcast now, monthly podcast, which is proving increasingly popular. Feel free to sign up for the market updates on the podcast. And if you have any questions at all, feel free to shoot us in an email or pick up the phone to us, and you'll find that we're very, very helpful company that very much puts our clients first and front and center.
Mark, thank you very much, and we'll definitely chat after the show, you and I.
That's great. Thanks for having me on, Lior.